Hey there, it's Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything real estate, mortgage, and interest rates. So click that like button, click that subscribe. I'd be forever grateful for the subscribe. Click that bell icon to be notified. I put videos out every single week. So let's jump in to our update. Our average 30-year fixed is at 3.02. It is now approaching late June. That is according to Freddie Mac. While you're down there, remember, click that like, click that subscribe. You can see the link to the Freddie Mac average 30-year fixed chart down there below. So what we've seen over the last week is we've seen interest rates rise. This is actually the first time we've seen the average 30-year fixed move above 3%, above 3.00 in about 60 days. We're the same place that we were April 15th that we are now. So we've basically seen a dip below, and now we've started to come back up. And that trend has been from the Fed meeting this past week. And I did a video before that I'll link above, talking a little about what the Fed said and how that kind of played into it. Now, what we want to talk about today is student loans. As you saw from the cover, we have a brand new underwriting policy that just came into play June 18th that is now going to allow more borrowers to be eligible that have student loan debt. And essentially what that means is that if you're on income-based repayment plans, if you're on a very high payment, monthly payment plan or whatever it may be, lenders have to qualify you. Right now, student loans are at zero. We have to qualify you based on something, okay? So lenders have to follow the underwriting guidelines set forth by, say, Freddie Mac, by Fannie Mae, by FHA or HUD, right? So a new policy shift with FHA now matches up with conventional. So a majority of people are now going to be eligible, or more people will be eligible because of this student loan policy change. The change is that we can count 0.5% of the balance. So if you owe $50,000 of student loans, we use 0.5% to qualify you as a monthly payment. So in this case, if you have $50,000 of student loan debt, right now you're paying zero, then we're going to use a payment of $250. That's the same for FHA and for a conventional loan. Now, these policies change. You have to apply to be able to qualify for these and see what you qualify for. With that said, that was previously at 1%, and now it's down to 0.5%. So someone with that $50,000 debt, they would have had a kind of mock payment of $500 to count against them. And I talked a little bit about this a couple weeks ago, and I'll link the video here when I talked about the debt to income ratio, the amount of debt versus the amount of income. And that's what it's all about. Sometimes clients just don't understand or they never got explained to them. Why do they only qualify for so much? Why are they not able to go for more or this or that? And it's really coming down to that debt to income, and specifically, like we're talking about today, student loans. And that policy changed as of June 18th. So if you have questions, put your comments below. I'll jump in there and try to answer them as best I possibly can. Feel free to drop me an email. I've got my contact info down there below as well. So student loans, it's not a dirty word. It's not anything to be scared of. You don't have to wait to get them paid off to buy a new home. There are absolutely programs out there to be able to help with that. There's even doctor programs. So people that are going through medical school or dental school or, some sort of professional piece where they're going to have a lot of student loans. There's actually programs that would even discount the student loans altogether and or qualify them on far less. So there's even programs like that that we have potential to qualify borrowers on. So don't let that be a hindrance. Don't let that stop you from being able to purchase a home and potentially lock in a rate that's, at one of the absolute lowest in the last 50 years. So this is the Mortgage Minute. My name is Ryan Skaggs. Thank you so much for tuning in, and we'll see each other again very, very soon.